BluSky TV. This is Coach Matt for the Technical Lab here today. It's a pleasure to be with absolutely everybody as we talk a few different topics here today. Earnings is on my mind. We're going to take a detailed technical assessment of the S&P 500 and the major market indexes from a multiple time frame perspective. And we're also going to talk a little bit about indicators and divergence here today, along with the earnings gaps. So if you're interested in learning a little bit about earnings, a little bit about gaps, a little bit about divergence, and want to take a detailed assessment of the technical landscape of the market itself, this is the session for you. Before we get too deep in the woods here, if you are new to BluSky, make sure to hit the subscribe so that you get notified whenever we go live. And if you are new to BluSky trading and you want to start your first challenge and be part of the next $10 million that is paid out to the traders of BluSky, well, you can go and get your nice little orbit plan. Head over to bluesky.pro. You can hit the link in the description below and check out those awesome evaluations. With that said, I want to really kind of talk a little bit today about earnings itself, and how earnings impacts the technical landscape in general. Earnings are obviously known as technical catalyst, is what they are known as. By the way, we're breaking 75.80 in the S&P 500. Strongly recommend keeping your eye on the price at 75.70 as we do dance that level later on in the lab here today. But before we get into that, I want to take a look at where we're at in earnings season, how to read an earnings report, and how to associate the gap that we see from an earnings perspective. And so when you look at the S&P 500 from a broad market perspective, what we have here, and I want you to understand that kind of when you do a detailed assessment of the market itself, I know a lot of times we stare down the barrel of the 5-minute chart and the 15-minute chart and the hourly chart, and rightly so, obviously, as day traders. But I also think it's important to have a general understanding of where we're at in the major market conversation as well, because the market's been very choppy over the course of the last week and a half, for example. And there's a reason for that. It's not out of nowhere. And I'll get into that here in just 1 second. But when you come out to the big picture, the longest horizon, and you look at a monthly chart, for example, am I sitting in a nuke factory? No, I am definitely hunting pips. Hunting pips, little Forex trader there. I see that. No, I'm not setting in a factory, a nuke factory there, hunting pips. But thanks for noticing there. But when you come out to the longer time frames, guys, right now we're about halfway through the month, and look at what the candle here is. Halfway through the month, and we have a doji on the candle. We haven't really seen any aggressive move. And so when you're looking at that monthly chart, what you have is you had a breakout a few months ago. You had 1 bar expansion, and then you've looked at a couple months of consolidation so far. So when you look at history and you understand how the behavioral side of technical analysis works, you understand that the last time we confirmed a pullback similar to the one we did just a few months ago, we had a nice little expansion phase in the overall broad market for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. The last time we had a pullback that got confirmed, we had an expansion series of 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. And so in the previous 2 waves in the marketplace, on the longer term perspective, you moved up 13 candles, i.e. 13 months in general, and you moved up 9 candles, which means you have a potential average yield of 11 candles, which means the average expansion that we see in the market is right now around 11 months before some degree of corrective retracement on the longer term side of the equation. And so there's been a lot of chatter recently about, is the market going to come down? Is the market going to come down? And the market can do absolutely anything it wants. But in general, when I look at where we're at on that longer term conversation, I see us in the beginning phase of something, not at the ending phase of something, which I see these two candles on the monthly chart, and there's a very important point here, as just a fractal, as a little bit of hesitation in the longer term story. And so I come into the weekly chart because I know I'm not overextended on the monthly chart. I know we just started another move to the top side on the monthly chart. So I come back down into the lower time frame, the weekly chart, and I look at the pattern on the weekly chart, and I'm like, all right. So we got some hesitation on the monthly chart as we have started an expansion phase last earnings season. Now we're going into this earnings season. So we've had one earnings season in the expansion phase. And when I look at the weekly chart, I got a high base. Now, a high base is a consolidation momentum pattern where you basically go through a little bit of short form consolidation. And we've certainly seen that play out over the last 6 weeks. And so on the monthly chart, we got two dojis over the last 6 weeks. On the weekly chart, we have a high base bullish continuation formation. So that's a fractal pattern within the longer time frame. Now we come into the daily chart, and what do we have? We have a daily chart that is looking at what we call an ascending triangle formation, where you have increases in support putting on pressure for the market to break out. So everything in the market right now leads to a breakout. It leads to breaking out of resistance. And if we don't break out of resistance, the path of least resistance is on the weekly chart coming back down to 7,400 here. And so it's a very fascinating backdrop going into the kickstart to earnings season, quite frankly. Oh, Jaja, the pattern, every pattern on every other longer time frame is bullish. It is. And it's not a matter of, you don't have to trust a judge. That's not my point, is to trust blindly in what has happened in the past. But what has happened in the past is an indication of where we're moving into the future. And so you don't trust it blindly. If I trusted it blindly, I'd be ripping off call options left and right every time the market came down to give me a little bit of an edge. It's about understanding the breakout. And so I don't have to trust the market. I can trust my eyes when I see the breakout. And so if we see a breakout, i.e., confirmation on the daily chart, confirmation on the weekly chart, confirmation, we wouldn't be confirming on the monthly chart right now. But if we get that breakout going into, say, tomorrow, I don't think so. But if we did get it, you would have confirmation on the daily chart breaking out of this ascending triangle. You would have confirmation breaking out on the weekly chart. And why this is important is for a couple reasons. Number one, as a swing trader, I've been a little hesitation lately. If we break out of a high base on the weekly chart and we break out of an ascending triangle on the daily chart, I don't think you should be hesitating in that scenario. You have a multiple time frame breakout situation, which is one of the most powerful technical formations in the entire marketplace. So it's not a matter of trusting it. It's a matter of understanding it and then preparing for when we see that confirmation. Because when you look at that ultimate longer term chart, let's come into the hourly chart here. That could have confirmed over here 2 weeks ago. It could have confirmed over here a week and a half ago. It could have confirmed right here just 3 days ago. It could have confirmed here just yesterday, and it could have confirmed here today. You've had multiple different tests against that 7630 to 7650 level, and we haven't confirmed. And so I do not believe in just trusting the overall backdrop of the market. And I know you don't either. I do understand that. But what I'm saying is, if we do get that breakout, that's our signal for the next expansion phase. And when you come into the lower time frame, specifically in understanding the daily construction here, because and I'm just going to ask you guys this because I don't know the question, but how has your personal day trading been in the last week? Has it been a really easy environment where you feel comfortable in holding a trade, or have you found yourself tightening up everything? Like you're tightening up stop losses, you're level to level, you're on lower time frames. Which one are you looking at longer time frames with more consistency and a little bit more loose on your execution, or are you looking at little bit tightening everything up, level to level, shortening the distance? Well, mean revision trades. I agree with that 100% tip. Anytime you're at 76.30, you should look for a mean revision back to VWAP. And anytime you're at that 9 EMA, you should look for that same thing. Yeah, Nacho, exactly. Me too. Me too. And that's kind of me as well. I don't feel comfortable in carrying a trend right now. I don't feel comfortable in doing anything on a longer term time frame right now. I find myself staring down the barrel more at the 5 minute time frame and managing the 5 minute time frame than I manage the 15. And anybody here knows that I love using the 15-minute time frame, but we're not even getting any degree of expansion on that 15-minute time frame right now, which and there's a reason for that. It's because of the daily pattern. It has nothing to do with the intraday side of the equation. The daily pattern is getting very tight here. And John, it's been weird for a lot of traders in the last week, and I'm trying to provide some context for that, because as the patterns get tighter and tighter and tighter on the longer term side, the market's coiling, and you expect the market to have a rapid repricing at some point. And so right now and over the last week, and I would say this in general over the last 2 weeks in as a day trader, it's been a lot of choppy price action. I've been stopped out more. I've tightened more distances. I'm using lower time frames. And the reason being is because number one, the intraday side of the equation is certainly choppy, but it's choppy because the daily chart is compressing. The weekly chart is compressing. And when you deal with triangles, and that's what we have here, we have an ascending triangle in the market. We have a high base pattern on the weekly chart. When you deal with those compressing patterns, you eventually get so tight and so choppy that you have an explosion of volatility one way or the other. And so I definitely don't want to say just trust the inside development of the pattern, because if it was just going to break out, it's had opportunities to break out. It's had 3 clean tests in the last week, hasn't had the ability to do that. Now, the last time we went through this pattern, just to give you a little bit of a previous cycle of this daily pattern, the last time we went through this pattern, team, we had an ascending triangle situation right here going into a potential breakout situation. And when you saw this, you see the same type of situation. You start compressing and compressing and compressing until the market has to pick a direction. It doesn't have a choice any longer. Everything's getting too tight. Everything's kind of coiling too aggressively, and it has to break out. And what we saw in the month of January with the kickstart to the first quarter reporting season, it actually saw a violation of that pattern. And when you saw a violation of that pattern, team, that ended up being multiple months of consolidation before the ABC cycle. These patterns are extremely important to understand, not just for day traders, not just for swing traders, not just for scalpers, not just for position traders. Legitimately, every single time frame is important to understand what's happening on this daily chart right now, because it is compressing. And whether or not we break one way or the other, if you break down, you're going to stay inside some degree of neutrality or choppiness for the better part of the next couple weeks. Whereas if we see a breakout, I'm ready to open up those intraday time frames. We see a breakout, I promise you, I'm going to be much more willing to use the 15-minute chart, much more willing to use the hourly chart, much more willing to be able to carry a trend, because now we're seeing that continuation of the expansion. Right now, we're seeing continuation of contraction. And that's why it's becoming so difficult. We need to see that continuation of the expansion of the analysis, which leads to that breakout. You're not really missing anything. Nothing has really changed, to be perfectly blunt with you, when you're looking at the general market over the course of the last 2 weeks in the market. This has been the exact same conversation for 2 weeks. The difference is in the last week, the pattern's getting very tight. Whereas 2 weeks ago, you could see a 1 to 2 day move in the market and have a pretty decent intraday trend. Like right here off the 50 period moving average, that was a really good intraday trend. Right here off the 20 period, that was a really good intraday trend. You don't have the ability to intraday trend right now because any intraday trend actually breaks out of the pattern. Whereas a week ago, 2 weeks ago, 3 weeks ago, 4 weeks ago, you had all the room in the world to maneuver between the top end of resistance and that ascending triangle support level. But now it's compressing so much that it's up, down, up, down, up, down, because it can't expand, and because the market knows it. The buyers fight for support because the buyers knows what happens if we violate that trend line. The sellers fight for resistance because they know they're going to get destroyed if it ultimately breaks out of that 7630 level and has some degree of sustainability. And so there's these big time battles happening right now, and the pattern is just getting tighter and tighter and tighter. And at some point in the next 3, 4 sessions, you have no room to maneuver. And so my advice here on the intraday side of the equation, and quite frankly on every side of the equation right now, is be a little bit more cautious right now while we're inside the pattern. Because while you're inside a triangle, you are going to see more of this number up and down. You're going to see more whipsaw. You're going to see more chop. But as we emerge outside the pattern, you get into what's called open air, and the market can maneuver, it can breathe, it can trend, it can find momentum there. And so two suggestions here: be patient inside pattern, but don't allow the pattern to bore you to sleep, because this is not one of those scenarios where you want to miss the breakout. It's okay to be a little bit frustrated with the chop. How many of you guys are a little bit frustrated with the chop over the course of the last couple trading sessions? And let's be honest, I'm a little bit frustrated with the chop over the last couple trading sessions. I don't see clean moves out there. I don't see amazing clean levels out there right now. There's some chop, there's some hesitancy, there's some tightening going on right now. But again, don't let that bore you to sleep, because if it does, you might miss out on what would be that next great move in the marketplace, because that daily pattern is just getting tighter and tighter and tighter along the way. And so this is deeply on my mind as a technician right now, because I kind of feel like the next trend we get is going to be literally resolved over the next 3 to 4 trading sessions. Whereas a week, 2, 3 weeks ago, you would be talking about weeks inside pattern. Now you're talking about literally days inside pattern. And so we're going to start to see some expansion here. And when you do get into the intraday side of the equation, you look at this on the hourly chart, not even a trend hits resistance, not even a trend comes down to support. It's literally impossible for the hourly chart to trend right now. It's literally impossible. You don't have a trend on the hourly chart. You don't have a trend on the 4-hour chart right now. These are all just up down, because those patterns are just getting tighter and tighter and tighter and tighter, up until the point where even on the 30-minute chart, you can't find a trend here on the 30-minute chart. On the 15-minute chart, you can't really find a trend here on the 15-minute chart. That's a double top up there. That is a lowering of resistance, and now you're battling at support. There's not enough room for the market to trend right now, which means the base case is chop. So when you see chop as those daily patterns are getting tighter, that's not abnormal. That's base case. We should see more chop until a catalyst emerges to break us out. And let's talk about a little bit of those catalysts here today, because we are in the heart. I don't want to say heart. We're in the kickstart to earnings season. And as such, we've gotten some earnings reports along the way. And we got a major earnings report here today out of Taiwan Semiconductor. Taiwan Semiconductors continually to pull back. By the way, if you're wondering why the market is not breaking out, you do not have to look further than the NASDAQ, as the NASDAQ is the general underperformer of the market right now. It's the weak areas of the market right now, and they're starting to battle some pretty important support levels in its own right, right there. When you look at it on the hourly chart, setting right at that major level of support team. This is a level that we should be tracking over the course of the next hour or so, as that is a major level of support. It is not a small level. It's not a 5-minute level. It is a daily level. It's the level that maintains the weekly pattern as well. And if you break that, you're pretty quick down to that wick low, and that's about a 250 to 300 point move team. And so if this is one of those levels on the NASDAQ right now where you are absolutely looking at reversal analysis. There is an opinion here at the 230 level. You see it right here kind of playing out. If the market wants to kind of break back up, I am looking at this level right here at the 350 level. I do not have an opinion at the current price. And if the market wants to break down, this 217 double wick low looks really good. And so my recommendation is not to have too strong of an opinion inside a short-term reversal level, situation with the major level. But either this level gets developed or this level gets developed, and both of them would be good tradable setups. And so NASDAQ at a very important level. And one of the things that we have seen over the last 2 trading sessions is Taiwan Semiconductor, which is the number 2 most important stock to the entire market, in my opinion. The number 1 stock important to the market is NVIDIA. But Taiwan Semiconductor reported an amazing earnings report here today. They beat EPS by 11%, increased revenue by 33%, and they raised guidance as well. And so we call that a hat trick. When you beat EPS, increase revenue by 30%, and you increase forward-looking guidance, we call that a hat trick. Yesterday, ASML reported earnings. They also pulled off a really good earnings report, and they pulled off a hat trick, and yet the NASDAQ is still selling. And one of the reasons is all of the memory chips, SanDisk, WDC, Micron, Seagate, all of them are confirming reversals, and all of them have further room to pull back on their weekly charts in bullish retracement scenarios. Keep an eye on 800 on Micron, by the way. That's a 50% pullback against the previous upward movement in price. But the NASDAQ is the weaker of the two. And the NASDAQ, if we see a violation of that ascending triangle, it's not on the S&P 500. It's not going to be because utility stocks. It's not going to be because of financial stocks. It's not going to be because of healthcare stocks. Healthcare looks great right now. Finance has had an amazing kickstart to earnings season. It's because of the weakness in the NASDAQ. And so the NASDAQ has a little bit of a cleaner day trading side of it, in my opinion, because you're at that level here today. And we'll be tracking that here in just 1 second. Now, the topic, I just wanted to at the first of the technical lab, just kind of get my technical thoughts out there. But I want to turn now to kind of understanding the environment we're in the market, because over the next 2.5 to 3 weeks, you should expect more volatility in the market, more volatility than chop, I would say. I want to describe the chop tightening condition of the S&P 500 as volatility. It's literally the opposite of that. It's getting tighter and tighter and tighter. But over the next 2.5 weeks, you should absolutely expect more volatility, team. 100%. On Google going up today, I'm unfamiliar with the news today. If there was news, we'll take a look at here in just 1 second, Jaw. Now, on a scale of 1 to 10, 1, you know nothing, and team, hit that like and share if you love the technical lab. But if scale of 1 to 10, 1, you know absolutely nothing about gaps, 10, you know absolutely everything about gaps, how would you personally rank yourself? And the reason I bring this up is because over the next 2.5 weeks, we're going to deal with a lot of gaps in the marketplace. We're going to deal with increasing volatility at cash opens. That's undeniable. We're going to see it. It's just a matter of which ones kind of do it. But over the next 2.5 weeks, we will absolutely be expecting gaps in the market and increasing volatility because as we go into the next 2-3 weeks of earnings season, we're going to see about 400 different earnings reports out of the S&P 500 team. It's going to be a fun environment. And oftentimes these gaps, especially out of major components, can truly help us give context and understanding to what is happening on those day trading instruments that we like to trade, like the ES, like the NQ, like GC. And so I want to talk a little bit about gaps because where do we get gaps? Well, a gap can happen at any point in the saga. Gaps can occur from a variety of different news sources, whether you're talking about, news that just comes out on any day that ends in Y, certainly can happen, but for the most part, gaps are known events. They certainly happen in unknown situations, right? Those are called a little bit of black swan events, but they're typically known events that we know when it's going to happen. For example, we know when major economic reports come out. Well, major economic reports are catalyst events that can create a gapping situation. We know when earnings reports. We knew Taiwan Semiconductor was going to gap today. We knew ASML was going to gap yesterday. We knew Goldman Sachs was going to gap on Tuesday. How do we know that? Because we have a calendar and we know when those earnings reports are going to be coming out. And so what a gap is, it is just the change in price from yesterday when the market closed to today. Now, Jaja's right. Gaps happen often and they happen all the time. There's always a gap in the market somewhere, right? Excuse me, got something caught in my throat. But there's always a gap in the market somewhere. But there are certain environments where you do expect more gaps, and we are absolutely in that environment. So I always kind of feel like it's just important to refresh our understanding of gapping situations as we go into earnings reports, because earnings are the number one causation of gapping analysis. Now, I categorize 4 different types of gaps. Now, you can categorize more than that, but I personally categorize 4 different types of gaps. You have common gaps, which occur frequently and all the time, and we don't want to have too big of an opinion on a common gap. The opinion's in the name, common. It happens all the time. We don't care that much about it. Common gaps also have a tendency to fill. What filling means is it gaps up and then the price fills the gap on the downside. The second type of gap is a breakaway gap. Oh yeah, I'll do it pretty much every earnings season, just to refresh our mind going into earnings season, because again, this is where we see probably 90% of gaps in the market is from an earnings perspective. Breakaway gaps have a tendency to start or continue an existing trend. Runaway gaps happen inside trend analysis and continue the previous trend. And then you have what's called an exhaustion gap that will end the previous trend and typically start a opposite type price movement. So when you see common gaps, and they happen on the intraday side of the equation quite often, quite frankly, especially when you're dealing with some non-liquid instruments, shall we say, like the ES will gap on the futures open on Sunday, for example, but rarely is it going to, gap inside the actual trading session, given the fact that, well, everybody trades the ES, everybody trades the NQ. It's extremely, extremely liquid. And so common gaps happen at the beginning of the trading session, usually more of a stock conversation, but certainly can be on a futures open, a reopen on the Australian market, for example, can see some gaps every now and then. But common gaps are not something we concern ourselves too much with. They're oftentimes just an imbalance of supply and demand where the market has to rebalance at the cash open. And so common gaps, not something we care about very much. They have a tendency to fill the gap range as well. Now, the breakaway gaps are very important because they break something. They break a resistance level, they break a support level, they break a pattern, but they break something. And because they break something, they start something. Because every trend in the history of mankind, from the ancient Japanese, and I shouldn't say ancient, 300 years ago, studying rice charts 300 years ago, or from Richard Wyckoff 100 years ago, or Gann, or Eliot, or Charles Dow, or any of the great traders of the past, or any of it, every trend that has ever existed in any technical situation starts with a breakout. And so breakaway gaps, they break something. And when they break something, they start something. In fact, inside pattern development, we just talked for 20 minutes about this same concept on the S&P 500, but inside pattern development, you don't have a trend. It's just choppy, choppy, choppy. And as patterns get tighter and tighter and tighter, it gets a little bit more difficult before it breaks the pattern. And when it breaks the pattern, that's when you have that next expansion. That's when you have that contraction. And so if we break support in that ascending triangle on the S&P, we'll start a contraction phase, or a markdown phase, if you will. Well, whereas if you break out, well, you're starting a new trend to the top side. And so breakaway gaps break something, which means they start something. And that is also referred to as the technical catalyst. And so when you deal with breakaways, breakaways have to be inside some degree of pattern. You're in a consolidation pattern. You're in a reversal pattern. You're in a consolidation pattern. But what you're not in is a rip roaring trend on the bull side or a rip roaring trend on the bear side. You're inside some degree of pattern. And when the catalyst comes out and it breaks out, that's what we call a breakaway gap. Now, breakaway gaps don't have a tendency to fill the gap. And that's a misnomer in the market. Most people think all gaps fill. They don't. They just simply don't. There's gaps that exist literally on the S&P 500 that have never filled. There's gaps that exist on lots of stocks that have never filled. And so not every gap fills. The majority of them do. Absolutely. The majority of them do, but not everyone. And breakaway gaps are one of those ones that don't have a tendency to fill because they're starting a new trend. They break up or they break down, and then they run away from the stock price to create a new trend. And so when you look at breakaway gaps right here, you have some degree of neutrality, some degree of pattern, and you break out of that neutrality on increase in volume. That's a breakaway gap. And oftentimes, once again, it doesn't fill, you run away. It doesn't fill, you have neutrality, you break down, you run away. So the breakaway gap commonality is neutrality going into the actual gap. Now, if that is the hallmark of a breakaway gap, is neutrality going into the gap, the opposite of a breakaway gap is that of a runaway gap. Whereas it's the exact same as a breakaway gap. Not hard to understand this one, guys. It's the exact same thing as a breakaway gap. The only difference is you're already in a trend. You're already in a higher high, higher low, or a lower low, lower high on a bearish one. You're already in a trend, which means you run away from the trend. Runaway gaps are typically a little bit more overextended. I absolutely do prefer breakaway gaps over runaway gaps, and to me, it's not even close. But both of them have a lot of commonality into the actual gap itself. Increase in volume, gap away from the trend, and then you run away from the gap. Now, when you're looking at the fourth gap, this is where it becomes complicated because you have the exhaustion gap. Now, the exhaustion gap can either be a trend going into it. It can be a neutral situation going into it. There's a lot of different examples of exhaustion gaps, team. But The importance of an exhaustion gap is not what is the trend and the pattern going into the gap, it's what happens after the gap. And there's a couple good examples here this week because obviously we have earnings season this week. And so when we look at, for example, let's pull up United Health. Now, United Health came out today and they reported earnings today. And United Health actually had a very, very good earnings report here today. In fact, they literally beat EPS by 29%, which is outlandish for a company like United Health. They had revenue growth, pretty boring, about 0.37% increase in revenue growth, but they increased guidance by 7%. And so the investors out there right now are saying, oh my goodness, that is absolutely amazing. That is an amazing earnings report. Well, me as a technician, I look at a situation where we have a trend going into it with a little bit of neutrality in the short term. You then break up, but you can't hold the bid here, team. And this is the importance because this is an exhaustion gap. You break up, which means everybody's like, oh, United Health's up. United Health's up. United Health's up 2%. Later on tonight, there's going to be a billion different news outlets, traders, Twitter around the world saying, hey, United Health up 2%. Oh my goodness, they had an amazing earnings report. And there's me saying, yeah, but I wouldn't touch it with Jaja's money. I wouldn't touch it with anybody's money, not because of United Health or anything about the previous trend. Has nothing to do with their earnings report. It has everything to do with on the overnight session, the investors were like, great job, United Health. Great job, United Health. And then when the market came in today, they said, nope. Bye-bye. We don't love you. We don't like you. We don't appreciate you. And that's with healthcare going up awesome today. Like healthcare's having a great day today. Gap up off that bullish retracement. By the way, made a trade on ABBV, looking great. But gaps up on the retracement, runs away from that. Healthcare looks fantastic today. And then I come over to United Health, and United Health gap up, can't carry the bid, sell down. That is an exhaustion gap. Exhaustion gaps have a tendency to not only fill, but they also have a tendency to start a correction in that market, especially from the longer term side of the equation. And so you've ran pretty aggressively on United Health, and now you're seeing a scenario where you got an exhaustion gap, which means you should start coming down. Now, that's an exhaustion gap. The difference between exhaustion, runaways, and breakaways are not really what happens before the gap. It's about what happens after the gap. After the gap, market sells off. Investors liked it. Traders hate it. Traders are the ones that drive price action, by the way. Market gaps up, sells down, exhaustion gap. On the flip side, let's go to man here. What type of gap is Manpower Group? Number one, you had a trend going into it. Number two, you gapped away from the trend. Number three, you ran away from the open. So if the exhaustion gap is it gaps up and sells down because they can't carry that bid, well, the opposite of that is a runaway gap. You have a trend going into it, you gap above the trend, and then you run away from the gap. That is the runaway gap. I'm not the biggest fan of runaway gaps because they get overextended very much, and then my technical eyes don't ever help me in that environment. But that's a really good example of a runaway gap, guys, because that's exactly what this has happened. Exactly, jaw. Trending analysis going into it, break up, break with the trend. That's important because you got to break with the trend. If you gap against the trend, that's already showing you exhaustion mentality in the first place. So you have a trend going up, market gaps in the direction of the trend, market runs away, gets deeply overextended, and there's not a stinking thing you can do about it until it kind of cools down, quite frankly. And so that's a really good example of a runaway gap. Now, let's come into Taiwan Semiconductor today. Now, Taiwan Semiconductor had a great earnings report like we talked about earlier in the lab here. But what they also did is they broke out of some degree of neutrality. So, team, what would you call this gap? Would you call it an exhaustion gap, a runaway gap, or a breakaway gap on Taiwan Semiconductor? I'll let you guys answer. I know there's a little bit of a lag here. What would you call the gap on Taiwan Semiconductor? Because how you label this gap will also tell me if you want to buy Taiwan Semiconductor or be patient. It's definitely not common. Tough on the exhaustion argument. I got this as a breakaway gap, personally. Remember, a breakaway gap has some degree of neutrality going into the gap. That's it. I'm with John on this one, Jonathan, because there's some degree of neutrality. And when you look at this support level right here and this support level that we were testing here, you have a neutral argument on the short term. And when you break out of that neutrality, that is a breakaway gap. Now, Jaja, if it would have broken down here and then fired back up, I would have agreed with you that it would have been an exhaustion gap. Remember, there's two parts to labeling the gap. One, you have the labeling of what is the trend and the pattern going into the event. The second is what does the traders do with that post event, right? And so because you gapped down and broke the support level and you're at the low end of that candle right now, you would have to see that as a breakaway gap, in my opinion. It can't be runaway. It can't be runaway because there's no trend going into it. If there was a trend going into it, you can make the argument of runaway. But this is either a breakaway or it's an exhaustion. And the only way you can determine that is what's happening with the candle. And since the candle is at the low end of the session, exhaustion candles are reversal situations. Does that make sense? Awesome. 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 Now, and so I just wanted to talk a little. Oh, and by the way, in Power Hour, every major earnings day, guys, I will update the BluSky team on the major earnings reports coming out of the marketplace, because earnings is catalyst events, and there's major catalyst events coming out of earnings season. And by the way, I would personally say the kickstart to this earnings season, I know we're early in the innings and we haven't seen any expansion of any price action yet, but I would definitely say that we have had a positive kickstart from the fundamental side of earnings. EPS beats are going up. Like today, I covered 9 reports today. 9 reports today. And of the 9 reports, 7 of the companies increased guidance. I don't know how much you guys understand the earnings conversation, but I will just say this. It's extremely rare. It's extremely rare to see so many companies increasing guidance. ASML increased guidance. Taiwan Semiconductor increased guidance. I'll just give you a list today of the companies increasing guidance today. United Health, Taiwan Semiconductor, GE, Prologis, Abbott Labs, USB, United Airlines, and Manpower. All 7 of those companies increased guidance today. The only 2 that I covered today that did not produce guidance from the positive was that runaway gap on Manpower. They actually dropped guidance by 2%, kind of shocking with the pricing. And then a smaller semiconductor company by the name of Caro, which saw a 4% decrease in guidance. It's very rare to see 7 of 9 companies increase guidance. Banks don't often provide guidance, so we don't get a lot of that from the banks these days. But regional banks look fantastic right now. The banking sector looks fairly decent right now. The healthcare companies that have came through so far have looked pretty good on that side of the equation. The only flaw we've seen so far in earnings is the exact same problem as we were coming into earnings. And that's the NASDAQ, ladies and gentlemen. The NASDAQ just simply cannot outperform the S&P 500 right now. The NASDAQ is absolutely the problem child in the market right now. It cannot carry a bid. Every time it tests up, comes right back down. S&P is all the way up here. NASDAQ is literally kissing support while the S&P is kissing resistance on the daily chart. This is a very, very fascinating level that we're going to be tracking throughout all of Power Hour, quite frankly. That lower point could get a little bit lower here. I am interested in the reversal, by the way. It is those memory stocks, John. Absolutely, it is 100%. I don't think it's more complicated than that. It's the semiconductors. It absolutely is. It's the only big problem in the market right now. But can we give all of the semiconductors and the memory stocks a little bit of grace, though? Because when I look at Micron, for example, Micron is confirming a head and shoulders formation on the daily chart. I would absolutely expect more price to come down, but on the weekly chart, like you're at 800, that's a 50% pullback of the previous move. And so you're absolutely right. They are the problem children right now in the market. I can talk about all of these that they're doing the same thing. You got 4 memory stocks, SanDisk, exact same thing, WDC, exact same thing, Seagate, exact same thing, Micron, exact same thing. When I look at the three major semiconductor equipment companies, okay, let's look at Applied Materials. Pullback here. Honestly, these are really good looking weekly pullbacks, by the way. LRCX is Lam Research, same type of thing. Parabolic uptrends, profit taking pullbacks, big time profit taking pullbacks. And then you have obviously with ASML earlier this week, big time pullback, we kind of kissing here. And so the memory stocks are the biggest problem child, no doubt. But I kind of have a feeling like I'm very interested in these longer term pullbacks in specifically Micron in semiconductors, I would say. Very interested in where the low point is in Micron. Very interested in some of the other semiconductors as well. But they are the problem of the market right now. And if they start finding some support levels, which they kind of like ASML is kind of finding that support level right now. If they find these support levels and start going back up, oh man, we're getting that breakout. We're absolutely getting that breakout because that's really the only flaw that we have seen in the market so far is those memory stocks and those semiconductor companies are pulling back against larger term uptrends. And I just, for one, yeah, it creates a frustrating environment in the short term, but in the long term, it actually gets me really excitable because guys, I'm going to tell you right now, you're not going to get a lot of opportunities to pick up a company like Micron or SanDisk or these memory companies on short-term downtrends, weekly retracements. And so they're absolutely a problem for the market right now, but the problem for the market can absolutely easily turn into a strength over the course of the next week and a half, 2 weeks. Just haven't seen it as of right this very second. Last thing I want to talk about today, and I kind of want to look at the ES and the NQ and GC here, is get on the lower time frames. And by the way, oh yeah, I'm very interested in here, right here. Look at this. That's where you want to see the S&P hold here, guys. You get underneath that, it opens up. It's a major, major test of the 70 level on the ES. On the NQ, we're kind of testing a little bit underneath that major zone here. It's a major, major, major battle zone. Team, Power Hour is going to be fascinating because we are not talking small numbers here. We are talking major support levels right now in the market are getting tested in major pattern developments. These are not small conversations. They're very important conversations. And one of those conversations that I'm going to look at as the market starts to kind of look at these lower levels of support, or what happens with MACD, what happens with RSI, because divergence, which we're not necessarily seeing right this very second, but divergence is a precursor to reversal analysis. And so when you're looking at RSI, MACD, just keep an eye on whether or not we start to see divergence on those lower time frames, because that's going to be an early indicator that the buyers are stepping in at those key levels of support. And when you're looking at MACD divergence is always going to be prices setting a lower low. On MACD bullish divergence, prices setting a lower low, but the MACD, specifically the histogram, is setting higher lows. And every time you see a scenario where price sets a lower low, but the indicator sets a higher low, that is a sign of divergence. And that is where you should start getting on the radar for potential reversal analysis. When you look at it through RSI, and MACD bearish divergence is just the opposite of that. But when you look at it through RSI, which is another wonderful indicator out there, you look at the same process, though. Price is setting lower levels of support. RSI is showing increasing levels of support. And so let's take a look at the market as we start to see these really important battles in the market play out. And are we seeing any change in behavior from what we've seen early in the session today as we go into potential breakdowns here, team? And so when you're looking at the at the Nasdaq here, here's your lower point. You're currently at that point. I don't see any divergence here. I see a convergence more than anything. When you look at RSI, here's your low point here. Here's your low point here. Price is officially setting lower lows. From that point on, price, let me get my drawing tool. Price is trying to set up a higher level of higher level on right there. So you do have a minor divergence here in RSI as we're battling the NQ, very important support level. I'm not seeing any divergence on MACD. I'm not seeing any momentum shifts on MACD. I'm just seeing a slight, and I do mean a slight level of divergence within the backdrop of the NQ. When you look at ES, looking at it through the same lens, let's just look at the current pattern. Very important test at 70 here, team. Very important test. Well, what do we see on RSI? Well, you got your low point here, and then you have a low point at 70. All right, so price is officially setting lower lows here. What's the indicator doing from that lower low? Slight divergence, I would say. So slight divergence here. Certainly, it wouldn't tell me to be on the radar for reversal. Being at 75.70 tells me to be on the radar for a reversal. But so far, you've seen that slight divergence as we're coming into those major levels at support as we go into power hour here in just a few minutes, team. When you're looking at gold through that same lens here, let's just take a look at the current pricing. Gold right here sets a lower high or a low, kind of sits a little bit of a higher low, but I would say very argued that's kind of in the same zone there. But when you're looking at this, well, that's the low on RSI. That's a little bit of divergence on gold. And by the way, gold is under 4K. If we get this to break back up above 4, I've had an order for the last hour and a half above 4K on gold, by the way, because Like, there's some major support levels right here, and I am ready to go above 4K there. And we do have a little bit of divergence on gold as well. So it's going to be a fascinating power hour here, team. Gold sitting at major, major, major. I can't tell you how big time of an important support level that is. ES sitting at that trend line at 75, 75.70. Can we hold, get a little bit reversal? NASDAQ sitting at a horizontal level of support. Very, very, very important backdrop going into tomorrow, because if we violate these support levels, guys, what that also means is the daily charts are violating as well. Is that the news on Google that they're delaying Gemini 3.5? Okay, okay, okay. So that's why we're getting the volatility on Google here today. Yeah, yeah. Because yesterday that was a great candle, kind of sitting right there at that resistance. I don't have an opinion on Google right now. We're too tight into earnings. Earnings is literally next week, and so like I don't have an opinion on Google right now. But a little wipeout candle from yesterday, no doubt about that. Team, if you loved the lab, you learned something today, go ahead and hit that like, hit that share. If you're new to Blue Sky, make sure to subscribe. And if you haven't tested out Blue Sky and you want to be part of the next $10 million, I don't know if you've seen that, Becky. I know Becky's waiting to get in here, but man, let's go look at that again. Let's go see that again. Look at that right there. Look at that. Over 10 million paid out in total so far, guys. To be a part of the next 10 million, go over to bluesky.pro. Hit the link in the description below. You can start a new evaluation, test out those orbit plans right now, which are absolutely fantastic as well, and be part of the next crew to absolutely drill amazing things from a financial trader's perspective at Blue Sky. This is Coach Matt. Hopefully you guys enjoyed the lab. Well, I'll be right back with Coach Becky. Unless Becky wants to join me. I don't know what Nick wants to do, Becky. Yeah. All right. We're going to be right back with more from Blue Sky coming into Power Hour, team. I will see you back in about a minute from now. Sky TV. This time I got the amazing Coach Becky with me to help me navigate Power Hour here today. You know, Becky, I spent the last 10 minutes of the lab just kind of talking about the importance of these support levels in the market. Simultaneously, NQES, gold, all setting at major support levels. Before we get into the trading side of the equation, I want to get your take on the technical landscape as we come into Power Hour. What's your read on the market right now?
Yeah, sounds good. Okay, so I definitely the market slid down overnight, so it was a bearish open, and so this morning I definitely had eyes on some bearish continuation if we saw a little pull up to get me an entry, and so that is how I traded the open on NQ. And so now I just traded briefly this morning. I only had a small trade time, and I'm coming back pretty fresh. I've been busy the last couple hours. You guys, I think, are gonna be on point, and I'm a little lagging here, but I definitely saw the early shorts, and then the pull up was strong, honestly. And so now we're kind of sliding down again. So I have to kind of reorient to where we're at in life. I think this is an important area here. I heard at the end of your lab here about the 75-70 on ES. We're right there kind of testing it. Double bottom action, but the bears might be pushing here right now.
It's a bearish pattern going into it.
Yeah.
Yeah. Bearish trend, bear pattern. I mean, even in the last, like, you've had four candles on the 5-minute chart test the 90 EMA, and it cannot hold a bid on the 5-minute chart. Like, if you can't hold a bid on a 5-minute chart, you can't ask it to hold a bid on any other time frame.
Yeah.
So it's a bear move going into it.
Yeah. Okay. It looks like Mary got a piece of that bear move. Nice, girl. Yeah, this is interesting. This orange line here is the initial balance of the morning, where it was really like didn't really expand, it looks like, on ES. And now we kind of danced at it, and we might be breaking the low here. So this is a previous area of interest of mine, this dotted area at 60.30. So this holds here. It could pop down to 63 pretty quick on this short side here. We'll see. Definitely continues. I see the continuation of the downside also, but this, if you see, it's very light, is a green area. That's from a larger time frame. Okay, so that's the low of, what is that? Yesterday was here, and so that seems to be breaking. We broke that low of day. So then, and then this is from all of this consolidation on Monday.
Yeah, that hourly chart definitely looks head and shoulders based. Looks like it wants to test lower.
Yeah. Yeah, it does. It looks like it just broke in the last half hour here, or it's tried and then now is breaking actively. So there's could be a breakout short potential right here. Let's look at NQ really. NQ doing the same thing. Yeah, they're breaking down as well.
If the ES is breaking, the NQ is worse. That's all I know.
Yeah,
I don't even need to look at the chart.
True story. True story. Okay, let's peek at gold really quick too. Is that's settling out a little bit more.
It's such a major test though for gold.
Yeah.
Gold, I speak as a gold guy. I don't mind going down to 3,500 as a gold guy. But that's like the last point before I get very, very concerned about the long term. But this is a level that better hold, or there's 500 points underneath that level. That is kind of,
free fall.
Yeah, it's open air. There's not a lot, and gold's been battling 4K on the daily chart, which at 39.87, you're still at 4K on the daily chart. That's not a break on the daily chart. But it's been battling, but the reality is, like, if these levels give after battles, well, the people that were battling, they stopped fighting.
Yeah, right. Gives it up. What if gold doesn't hold this level?
Mary, there's only two levels underneath 4K that are important in any capacity. One is the 20 monthly moving average at 38.50. And I think it could slice that one through like a knife through hot butter. The 3,500 zone is a major, major zone. Like, I feel like if we get anything sustained to the downside here, 3,500 is a major, major, major zone of support. And that would also equate to $50 on silver as well. And I have a much stronger opinion at, like, don't get me wrong, I'm impressed by the battle at 4K. But I kind of feel like we're losing the battle at 4K a little bit. But I do have a stronger opinion at 35. Like, 3,500 is a major, major, major support zone. I would definitely look, like, I'm not fighting gold analysis right now. I'm day trading and I'm cover calling gold right now. But at 3,500, I'll have a stronger opinion on the longer term side there. And I do have a strong opinion on silver at 50. And so it's one of those things where I don't want it to break because I kind of want to get sick. I'm sick of writing covered calls. But if it does break, there's 500 points there of open air because when gold was going through its uptrend, and this is so awesome when you're going through the uptrend, right? It's like, oh my goodness, I'm so great. I'm so great. It's just printing money on the top side. Oh, I'm fantastic. But as gold's going down, you're like, oh, no, I'm terrible. But the reality is, as gold goes up that fast, or any instrument goes up that fast, it doesn't create support levels. And so as the market comes down, there's not a lot of support levels to really kind of bank on historically. And so 4K, for example, is not a historical support level. It's a battle zone. It's an important zone, but all it is a pivot, and it's minor. But when the other side of the equation at 3,500, that's much better. Oh yeah, John, ES and Q, they're both in shortable situations right
All
now.
right, can we short the breakdown here? Is that it's already to the target,
I
isn't it?
kind of feel like that's the only trade you can make if you're going to make any trade.
Yeah, it definitely broke in its continuation. So if you're in a short, I really like 64 as a target here. I need to pull back up to this breakout here for me to get in.
I'm too far away from the 9. I'm doing the exact same thing you are. I'm just saying, give me a slight pullback to that 9 here.
Yeah, right in here would be, let's see, I would like, let me see, sell, let's see, 70. 70 is kind of this
70 is the number.
and it closed under. That's halfway through this body on this 5-minute. I like that entry.
If you can get anywhere to 69 to 70, I think you're fine there.
Yeah, for a continuation, because we do have 45 minutes here. We could get some move down. NQ is pushing fast.
I'll be targeting 35 if we get this short, by the way.
If we have enough time.
And that we might run into time there, but that's
a lower target.
That's the next target.
Yeah, I've got 50, 60, 30, and then to 50 before then too. On NQ, I've got a target at 156 on a weekly level as a high liquidity area. So if you're shorting NQ, 156 is coming up fast. I was just not at my screens before this power hour, so I feel like unprepared. 156.
Got double wick at 169 too.
Yeah.
On NQ.
Okay, so it could bounce back up here and then go for those targets.
But underneath that, you can get down to 930.
On the weekly, this is where I got that level from, that right there. And that this kind of held for a while is what I was thinking on that target.
That could be an issue.
Yeah. Could be a place to scale if you're in it, and it could bounce there a little bit on NQ. But I also want to hunt that liquidity too, because that was a good size pivot on that turn there. Oof. They're sliding. You want 154 maybe, Jonathan? You got one extra digit in your number on there. Oh yeah, there you are again. 125. Yeah, that's a good target. 115 target, yeah. Choppy short was not on my bingo card. Oh, I know you guys are on point with me with the short here. I don't think it's gonna come back.
I'm a little surprised with the positive earnings analysis that we were seeing this sell off.
Yeah,
like I'm not surprised it's selling off, but man, it's continuing. We're close down to 2% here today.
Justin's hunting 113.
I don't know. Judge, I have a hard time buying into the memory's just gonna skyrocket back up. I think we got time. They just broke support levels in reversal analysis. Like, I can't tell you what to do, but in my opinion, I would suggest that, we have time to make those decisions. And secondarily, 3 of the memory chips report earnings next week. I mean, 2 report next week, 1 report the week after. Micron reports late in the season, like, literally a month and a half, 2 months from now. And so at least if you're gonna buy a call option, don't do it in front of major earnings reports with the volatility at the high point, because that's gonna be extremely expensive, especially if you're talking about buying 3 years of a out of the money call option on memory stocks right now. You are literally paying premium for that. If you do it, I would do it after earnings and when we get volatility crush. Like, even if the stock's up 10%, but volatility is down 40%, the option is gonna be about the same price.
Yeah, Jonathan had 153, I had 156. Those are good targets. I like that for this. Yes, for this NQ short here. I did not get a fill. Ay, 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 ay.
We might just have to bar this one.
I know we might have to because it's sinking here, but it just broke a good level. So a little more of a retracement kind of makes sense. I don't really want to chase it. I also think it's
my track
sinking.
record chasing, but like I was
Gonna be a
talking
hell of
about
a bounce. I think so too.
in the lab, we're starting to
There's
expand
target.
outside that daily pattern.
Okay,
And
they both
so
hit target for me. So I think they're gonna bounce hard here. First target, anyways.
I just don't like getting involved 3 bars after the 9 EMA got tested.
Yeah.
Should have got involved then.
Yeah.
Kind of feel like I missed it.
I'm gonna take a little bit of this bounce action here, but it's thinking good. The bounce would be a little bit aggressive, but we're also kind of extended to the downside. Thank you. Is that looking better?
Yeah, no chasing, Jonathan. I'm with you.
Yeah,
Every time I've chased this week, I've gotten beat up every time I've tried to chase this week.
if I was in, I would be scaled out and I would be moved to break even on this short. That would have been my target right now.
And if I was in, I would have been nothing so far, but I would have just a stop loss.
Mm-hmm.
Yeah.
Yeah. I think this is a key weekly level. I'm going to take a little bit of a bounce. It's just kind of risky, so don't follow if you don't want. I'm long on MNQ. This is my weekly level.
Do you have an opinion at the level? Take a stab. I tried to do that on the ES earlier today. We'll see if it works out for you better than it worked out for me.
Oh no. It's continuing, so I'm not going to give it a ton of room. What do we got? 1 minute left on this 5-minute candle. Yes, it's bouncing nicely. Let's see what she want to do. The multi-level confluence here.
We might get our ES 70 bounce, by the way.
Yeah.
9 EMAs at 71 right now.
Yeah, ES is bouncing a little bit faster than NQ, but NQ had a bigger weekly level here. That's why I kind of like it. I'm just going to take it back up to this breakout level on the 9 EMA, which would be 196.
Where we're looking to enter.
Huh?
Where we're looking to enter the short.
Yeah.
Yeah.
I'm short there too. 162 to 196. Just a 30-point bounce here to retest the breakdown.
I used to, when I was in college, Becky, my brother was a professional gambler.
Uh-huh.
And poker was his game of choice, but he also was a handicapper for college football games.
Oh.
And so he would have me run money kind of for handicapping. And his favorite thing to do ever was to get early in a bet, have the line change, play the opposite side, and try to drill the middle of a 3-point range between a 6-point edge versus a 3-point edge. I know that might not make sense, but That's exactly what you're doing on this trade, trying to drill that long up to the entry to the short. You'd make my brother Mark very proud right now.
I mean, I had these levels, man. These targets are legit, and they're for a reason. That's why I draw my charts ahead of time. This bounce on ES is gorgeous.
I think you should always trust your levels.
I think I've been studying levels for more than 5 years now. I like them. I like them a lot. It was too late to short, and so that level was a multi-level on the weekly and the daily, and so that's why I attempted. But I don't recommend catching knives ever. To each their own. But
no, this is one of those Red Bull commercials where you don't try this at home.
Enter at your own risk.
Becky's the Red Bull trader jumping off the high dive.
100%. It's working out right now. But
I think it's a good trade.
It doesn't always, you guys. And Jonathan, I love that. I save screenshots of my charts a lot of times. When I'm doing a really good job journaling, I take one every single day and I annotate it. All right, that was a good little move here. We'll see if it's going to sustain or not and get to my target. Because it is counter trend, once this candle's a little bit more baked, I'm not going to take this full risk here. I'm going to give it a little bit of time. When I looked away, it started moving. Yes, bounced. Oh, shoot. I just moved that level. Dang it.
No, I was waiting for one more tick up.
Yeah. I didn't
Still am, by the way. I don't mind the current 3-bar pattern here.
Yeah.
Like, even if you break the 3-bar pattern, I think you can short. You're not extended any longer.
Yeah, I think that was a nice retest here, and it didn't get to my level either. I'm gonna, what should I do? I don't want to squeeze it just yet. I'm not going to give it the full room. Counter trend. I'm not going to give it the full room. Keep it in tight. See what she does here. They're both
be a low base at this
They're both looking weak. Yeah. The continuation to the downside here. Did anyone get in on anything on the short side?
I'm not in yet.
I think the bulls are failing. I think it's continuing to push down. I'm going to start layering into the short because that was a weak.
Bulls got rejected before it even tested the 5-minute.
Yeah, it was a weak retracement.
Yeah, very. I don't even know if I'd call it a retracement.
Well, like on 1 minute.
On a 1 minute, yeah, exactly.
Let's look at the 1 minute for a second.
Yeah, they just came back up into that 1 minute pivot or resistance level.
Right here. See what she does. I'm going to see if I can catch some more shorts on it.
Bears still have control of the trend end pattern.
They do, and we have time for a little bit more downside, and the longs did not work. And so I'm going to see if we can blow through some of this.
They're actually picking up a little bit of momentum to the downside too.
Yeah. I'm going to put it on top of this pivot here in this.
No, Jaja, I did not. I did not say 1 minute time frame. I said Becky was looking at the 1 minute time frame and assessing the pullback.
Yeah.
And then I said yes.
I need to get a clear picture. I'm gonna do a 3 minute. What do I want here? I'm gonna stick with the 3 minute here. So we're kind of in free air on this short here. I don't have a close target in Q on my levels. Man, don't love that. I love having a target that I can conceptualize. We're kind of just free falling under my target now. So see what she'll do here. What do you guys got for lower targets on NQ? Oh, he recorded it for posterity. Jaja. Oh, you can screenshot this one, Matt. Okay, here's the fall. Here we go.
75
Shouldn't have
40
gone counter trend.
on the
What do you
ES.
got?
I don't know the NQ target,
NQ
but
either.
mine on the ES is 75 40.
Think it.
That is not Jaja. You just did me dirty.
I love that.
Oh, that's funny.
Uh-huh.
This is accurate. This is accurate. I do not appreciate the 1 minute time frame. Not the way other people do. But what's the saying, Jaja? When in Rome?
Do as the Romans, right? All right, I'm going to scale at 29,102 because the key level of 100. When you don't have targets, go with the whole number. That is one of my backup isms. Jonathan's got 124, then 111. Okay, I like 111. Ooh, Steve would like 111.
All I'm saying, like, take it with whatever you want on targeting right now. Momentum is picking up to the downside.
Yeah.
That's all I know. We break
Agreed.
in, we're underneath major supports, and momentum is picking up to the downside.
Yeah, but sometimes it's a hard fall into a hard return too.
Well, that's why you get paid the big bucks if you carry a trend.
Hey, I'm not saying you're not wrong, but I'm saying we have 30 minutes left, and that was a good break. So sometimes we get hard pops out of it.
Oh, I expect volatility going into the close. Absolutely.
Let's see if I can get a scale at 111.
You're also on the NQ. I'm on the ES.
28,972. Thanks, Jonathan. Google, what's Google doing?
Volatile as all get out.
Ay. What's their problem?
They delayed Gemini launch.
Oh, yeah. I heard that a lot.
Jaja brought that to our table.
Sinking like a rock. Although Google is bouncing a little bit right now as well, too. I don't know. I'm kind of monkeying around at extremes here. I don't know. Trading is obnoxious. Tip. Can we push lower? Okay, I'm right back to my key weekly level here right now.
You know, the amazing thing in this NQ and ES breakdown of support, gold hasn't broken yet.
She's just holding steady.
Yeah, she's holding up.
And it, girl. Let's look.
If the ES gets back up above 70 here, I'm going to like gold a lot. By the way, I don't expect the ES to get above 70 today.
No.
Bears have control of trend.
And gold is sliding down now as well. On the small time frame.
Yeah, I'm looking at the 5.
You guys, this weekly level might be holding. This might just be a wick down below it here. I'm not going to be here on this short. 172 is my stop.
Man, the NQ is actually looking holding up a little bit better than the ES.
Which is at that level that I'm really interested in potential battle. And so I don't know why I'm engaging in the battle right now. There's some good volatility and the direction is down, but let's see. It needs to follow through right now. I got like 2 points from my stop.
Every single piece of technical analysis tells me we're seeing lower prices on the ES.
Yeah. Yeah, there's he's sinking. Looks good. There's some good energy down. Check the daily candle. Oh, yeah, let's check the daily candle. I'm gonna go to my NQ for the larger time frames because it's not quite as messy. Super bear. Oh wow, what a mama. Dang. You know, I shorted at VWAP this morning. It was gorgeous. I just, you know, do you remember those times where you're like, oh, short?
Mm-hmm.
Let me show you guys my fill. It was really good. Frame.
$50
Right here.
on ES is my T1.
Yeah, that's what I would do too. 50. I really like the 50 level on
I'll
ES.
pull some off at 50.
I like it. I'm
My
gonna pull
T2 target on ES is 40.
Okay, beautiful. I got 111 as my T1 on NQ short. This was my short earlier on NQ and then took it down to the low. Good. Now we just need to get down there. If it gets down to my target at 111, that will make back the loss on my Hail Mary long.
Yeah, if it gets back to 50, it'll make my loss on trying to pick up the low at 70 twice on the ES earlier.
Talking about destroyed. Let's go. Take it out.
I gotta stop front running. I gotta get Jesse Livermore back in my head.
Yeah. It's tricky. For me, I have to constantly like steady myself out when I'm like streaming, especially because I don't know, it's fun. It's the energy of it. You're like, oh, look at that opportunity, and I gotta be real. I need to be really particular as well. So, yeah, I got so close. What was that 115 where it did tag 117? Come on, you know you want to take it out. Let's go. Look at the 15. Good momentum here. 1, 2, 3, 4 strong 15-minute bear candles.
Wouldn't be surprising to see that start slowing down.
Yeah, that's an hour straight.
Yeah.
I mean, it's been bearish mostly all day, but
you get about 6, 7 candles in on almost any time frame right now without some hesitation after that.
This is my trend line on that daily chart that we just zoomed out to, and it's around 29,075, I would say, in this current time frame ish here. So interesting. Coming up as well. I don't know if we have time today. Tricky. Oh man, you're gonna make me think. Good. I feel like we should be able to play that song.
Which one?
Tricky. You know, copyrights are like, come on, can't we just share the love with music a little bit?
No, the algorithm will literally shut BluSky down.
I know. Oh, I know.
You guys can't go live for a month and a half, and when you do, we're going to shadow ban you.
Well, you get flagged and you get labeled.
Google algorithm. There's no appeal to it. Like there's no Supreme Court. There's no pardon. It's death. That's the Google algorithm.
Smackdown. I'm very uncomfortable. I think it's because it's just like dancing here. Like, I don't know.
I feel good on the ES, but it's extended. I expect a little bit of consolidation for the next move down.
This is me this time, Mary. I know it throws you guys off because you don't necessarily always know whose chart it is, but you want to see the 1 minute?
Reversal, you better get out. That's a double pivot on the 1 minute. Let's overthink it.
Smart arse.
I get.
I put an R in there.
Would you rather have me say that's a fractal move within the larger construct of the 15-minute chart?
Yes, I would. I like that a lot.
Okay. All right. It's a fractal move. I still like your short.
I'm gonna honor the risk. I got some green on the day. I'm gonna $200 to see if this plays out, takes out the low. I'm gonna see what happens. The momentum is the downside. My concern is that we're getting towards the end of the day here, and I want it to take out this target.
Totally with you on all of
The
that.
candle is very
Yeah.
large.
I'm also going to counter that with saying that even on your ridiculous 3-minute time frame here, you haven't bucked the 9 EMA yet. So can we at least get above the 3-minute 9 EMA before we get too concerned? That's all I'm saying. That's all.
Did you just call my 3-minute time frame ridiculous?
I'm calling. I have to fight back against Jaja right now.
Okay. I heard that Matt requested the 30-second time frame just now. I don't know if everyone else heard that, but he said this is way too big. I need the 30-second.
Let's get on that tick chart. Come on.
Get
on the tick chart.
30-second, real bearish. Just saying.
I swear we're gonna find some momentum shift somewhere.
30 seconds says hold. 30 seconds says hold the bears. Can I put a trend line on the 30-second? Hold on.
I'm gonna shut my eyes for a second.
I don't even know what to put a trend line on this chart. You know, one time there was a live streamer that I was on, and he was trading the 15-second chart, and I was like, "What is happening in my life? I don't."
Oh,
okay.
That's a lot.
Yeah, look at that. I put a trend line on the 30-second.
Bring out the big guns.
Look, it works on all of
Yeah, gold violated right after I said I was slightly impressed.
Oh, why you gotta mess it up?
Yeah, I do blame me on this one. I've been begging for gold to hold 4K all week long. Trade Terminator, you gotta have fun, brother.
Yes, hit 50 almost.
You gotta have fun. Plus, it's always easier to have fun when you hang out with a bunch of people you enjoy hanging out with. You should always have fun.
We might as well have a good time while we're trading. Come on, sink it. What time is it? 38 after?
Say that again, Becky.
I was looking at the time. It's 38 after. So we still got 12 minutes to unbalances.
We got all the time in the world. Actually, we got 12 minutes. That's what we have.
Also known as 12 minutes.
Also known as 12 minutes.
But
about the same thing.
Pretty much.
In the ballpark.
All right. I'm going to leave my stop and then we'll see. It's threatening it. ES got shy of the target as well. It got to 53.
Yeah, I got 3 points away. Like I've been 1 point away from my limit order at 70, Becky, to get in, which means I had to chase at 64. And now I got 3 points away from my scale out target, and now I got to set through a pullback going into imbalances. Man,
dude,
work with me, market god. Come on.
I think it's trying to hold.
I'm gonna go watch the Odyssey to get the Greek gods on my time. Let's go, Team Delta. Let's go.
Yeah. I'm not gonna get any wiggle room here because it looks like it's trying to hold. This 5 minute is real indecision-y. Especially on AQ. ES was a little
I haven't seen the EQ for a couple minutes. That is very wiki.
Yeah, it's real not doing it.
Nick, bad answer.
You think she's going up too? I kind of think she's going up too.
You give Homer a chance. Nobody can have an opinion unless they've read Homer's great work and the Iliad. I'm gonna throw it out there too. If you haven't read, well, I'll save the historical lessons. Let's track it balances.
Yeah.
I don't know. I've heard mixed reviews a little bit, Nick. But I've heard the last third of the movie is absolutely outlandishly epic.
30-second reversal. I know. I'm feeling out of my short, honestly. I'm kind of
seeing I'm at break even right now on my short.
I couldn't get to break even, so I'm in profit right now. But if I go to break even,
get to break even. Yeah.
Break even has me out, which is fine because I actually think it's holding. I got a couple off here.
30-second chart reversing. What's the tick chart tell us?
Mm-hmm.
Do you want to do it? Do you want to pull back? What are you going to do? Yes. What are you going to do?
No.
What are you going to do?
God, nail. I need file. Sorry. I think Oscar wants a 30-second as well. All right, here we go. See that sideways 30-second craziness. Look on the 30-second chart.
That is the best reversal I've ever seen in my life. Like, wow. Wow, that's going to bust up the daily chart, guys.
Very pretty.
It actually is a really clean double bottom.
There. So that was like a quadruple bottom on the 30-second. All right, I don't think she's gonna work out for me. Close down these. I'll put this back down here, but
Are you flipping script?
not yet.
Oh, you just adjusted stop.
It tightened. I took 2 off in profit a few minutes ago. And then, so I only have half size left. And then I just adjusted and took off my limits, and that's a straight up bracket.
Honestly, Hoster, I would love a V shape here tonight. I would love it. I would love it. I would love it. I would love it. You want to know why? Because I really want that ascending triangle breakout on the daily chart. I want that expansion phase in earnings season. And the closer you're to 7,600 going into a catalyst event, the bigger the volatility move is going to be. So I wouldn't mind a V shape here.
I wanted to come down and get me out of my short, and then I can entertain the long.
The number one thing I want, though, in life at this point is a gold reversal. Three, two, one, tipped. Like it.
Okay, I am out of my short. I scaled them all out, slight profits, and I'm flat. Now that it's going lower.
Speaking of rockets, SpaceX is on its journey to $100 a share. Want to keep throwing that one out there.
Ooh, she's popping, huh?
She can't find a bid right now.
I haven't been following it. I honestly am like, meh.
I want SpaceX at 100 so I can start acquiring shares.
Okay.
I want to
be
an investor.
Yeah.
It's just I'm never going to buy an IPO. That's ridiculous mentality.
No, I feel like I got to look because I'm out of the tune.
90. Can we play the 6-minute abs game tipped? Because I'll go 82. I'm just saying that the number for me starts at 100. Like I'm open to reversal technicals at 100. Anything underneath that, I'm good. The lower the better, in my opinion. The lower the better.
131 right now for SpaceX. This chart is literally like the example of why you don't chase IPOs.
It is the prototypical IPO.
We need to do a PSA about it. Oh, look at this sell right after I scaled them all out.
I think I did like 15 PSAs before SpaceX came IPO, warning everybody not to buy the IPO.
We really did. Oh, there's 111 just hit. Boop.
Oh, sweet. I think I'm going to get my 50 level back.
Get it.
That's why you don't go to a 1-minute chart.
Okay.
Not talking to you. Talking
what about
to
the 30-second? Only the 30-second.
I better say this: why I don't go to a 1-minute chart, or I would have overanalyzed that reversal.
Okay, well I'm in long.
You went long?
Yeah.
You are going against me.
I'm just playing this chart a little bit. I'm just in it.
I don't mind it.
It battled so heavy right now, and it just got to that 111. Like I just don't see a lot of targets below. I think we're out of time. I think the daily candle is massive.
3 consecutive candles on the 5-minute chart bounced right here and went straight up 7 points to 60.
Yeah.
But I am hoping you lose your trade.
I am. Let's see. I'm having like gotten a real interesting average here today. $3.51 candle.
Okay. I'll adjust to 351.
Let's go.
Well, not 351, but 51 minus 75.51. But yeah, I'll go 75.51. Had the order at 50, but I'll scale out at 51. I definitely want to scale out in front of imbalances, though. Like that's like one way or the other, I'm scaling out going into imbalances.
Man.
It's a really good question, Tipped. It's a very good question because we all get excitable about lower prices, right? We all get excited about reversals. But if everybody's selling and you're the only one buying, you got to ask yourself if you're the well in the room.
Definitely. It's bearish. We'll see what she does.
Probably going to dance here for 3 more minutes.
I know. Thank you.
By the way, team, you love Power Hour, hit that like. Don't forget, helps out with the Google Algo. Love you guys. Appreciate you.
Yeah.
Oh, we're getting our 51. We're getting our 50. Let's go.
Woo-hoo.
All right. Scaling out.
That was a beautiful tag. Man. Man, come on.
Will we break 29 in the NQ like today? We could. I don't like the odds, but the market is not done selling yet, in my opinion.
I think this level is so interesting.
If
I'm
the
playing the
market
risky
says-
move. I'm showing the risky move.
Rip your face off. There's no more catalyst events this week. I want to alleviate going into the overnight. Market's been selling for the better part of the last, I don't know, all day so far. Well, at least, hour after the market open. And 100 points on the NASDAQ in a volatility move is legitimately nothing. I need a BluSky hat.
Where do we get BluSky banners?
I need a BluSky hoodie. I need a BluSky pullover. I need a BluSky hat.
Get it together, man.
I got to get it together. I do.
Mm-hmm.
I do.
I do love my BluSky swag that I wear sometimes, but I can't. I feel like I can't wear it every day. I gotta wash it.
That's why you have 5 of the same shirt, Becky.
I know. I need to order more.
Like, I don't know about you, but I'm a man of simple needs. Like, just give me the same shirt, just 5 different variations of it.
Yeah.
You wear it every day and you're fine. I have said, if you have not heard, I am the most consistent man in America. I do not change unless the data changes. The Adidas Superstar 2 is the best shoe of all time, so I still rock the Adidas Superstar 2 for the last 30 years. The ProFit hat is the best hat, so I rock a ProFit hat. Thank goodness I got my scale out target going into imbalances.
Yeah. Yeah, I'm gonna hold this for a little bit here. My target on the upside is gonna be 64, right above my weekly level I was hunting.
Yeah, imbalances have been positive so far. ES is going to stop me out after my scale out.
This was such a massive level on the weekly, you guys. I promise I'm not always a risky trader. I scaled in and I stay light, and it's because it was a massive level that I was hunting. Guilty.
I'd trail if I were
Sure,
you.
you're bad, girl. I know. I'm sorry. Such an interesting level.
Trader, thank you for that. Truly appreciate that, my friend. We
Yeah.
love Blue Sky obviously for many reasons, but one of them is because of you guys. You guys have supported me and Becky in what we do with our labs and trying to, you understand what we're trying to build. That's amazing.
Yeah.
So thank you for that. I'm flat. I'm flat for the rest of the day. I'm done.
I am raking in some profits, not gonna lie. I'm working on my scales out here, so I'm protective, but
Yeah, I'd
it's a
trail,
good look.
let it run, scale.
It's always kind of fun to have two streamers, to kick it back and forth. And like I cut my short because there was so much hesitation and it was such an interesting level for a bounce. And I got in early on the bounce, but so it's like there's a lot of ways to make money in the market. You just have to honestly respect your risk and have an idea of the levels and what's going on and what you're thinking can happen. And I love scaling because it really does protect you. You lock in a green trade or a green trade when you can get that.
Scaling and trailing are the two things that make things a little simpler and easier.
Yeah.
Yeah, I
It's
agree with
valuable.
that.
Yeah.
Locking in a little profit after a move on a day trade and just kicking your feet up and throwing that top in that trend. Beautiful thing.
Yeah.
Buyers stepping in here aggressive though.
It's beautiful. That's what I was hoping for. This level was really big when I zoomed out to the weekly level for multiple reasons. And so I scaled into 6 micro and Q long, and then I just took out 4 here at my key weekly level on the top side. And I have 2 more runners.
I literally scaled out 1 minute before imbalances, and then this thing would have ripped my face off if I didn't. So I was very happy to scale out going into imbalances. Yeah. I was going to do it if I got my number anyway. So I'm just glad I got my number.
351 candle. Hey. Yeah. Yeah. That 51, that 50 was like, that was a good level. I love that you got your scale on that. I cut my short before it got to my scale. It did get there, but I just, all of this psyched me out. And so I just saw a lot of hold at a weekly level. That's why I flip bias and
you had a level, you had an opinion at the level. Don't let anybody shake you off your opinions at your levels. You know what
that's
I mean?
why literally on live I took the counter trend trade. I'm not gonna lie. It was a little uncomfortable. But that level was a big deal for me. And so I wanted to trust myself.
This is a major move out of imbalances.
Oh, you meant the time 351. Is that so 351 and balances start at 350? So you guys are talking about some energy at 351, or that like targets hit at 351, or what are you guys talking about the 351 trade terminator and Jaja? Tell me more. All right, this is at my key week level on the ES. That's where I think ES get it out. Huh?
They're talking time. One of my targets on ES,
that's what I mean.
This
about
might
time.
have confused it, was the 550 level. And so,
well, I saw they're talking about time, but I'm saying imbalances hit at 350. The move starts then. Are you saying 351 you get in, or at 351 you get a target, or what are you thinking with the time? I'm curious how they're playing it. Sometimes I feel like at the 350 point, you do get the energy of imbalances, and then you can join on board with that. I wonder if that's how they play it.
Well, all I know is this thing skyrocketed right back up to that 70 level, which
gorgeous.
is a massive.
I'm going to give my runners a little more room. I wonder if we can get up to.
I'm happy. I got a little profit on that day trade, and I'm going to finish inside the daily pattern, which means I am happy.
I just wanted to move my target up, and it popped and took me out. Okay.
Man, when did bulls become more aggressive than bears?
They're ripping it up today right now. They were setting up. That's why I was so uncomfortable, because I was like, this is not bearish continuation. This is some changing of the hand. So this was a stop hunt for anyone who got in too early on the long, and a little continuation to get people to get in late. And then this pop was because this is literally on that not that I know all the things, because I have a bazillion more things to learn and I'm very humbled all the time. But my issue with this level is that on the weekly, that's that trend line. And so that's like such a big deal. Like where we just kissed, I'm like, there's gotta be eyes and money here. There's gotta be. And so I was so uncomfortable holding you short and deep into that. And it did get to that target of that 111, but it just
volume's expanding here, even after imbalance.
There are buyers here, you guys. Like you could hold a long. I think there are buyers. Weird.
Honestly,
Obviously, we're seeing it.
I'm impressed. I'm genuinely impressed that the buyers stepped up with increasing volume coming into the close here today, because if they would have done the opposite, you're talking about a breaking of structure on the daily chart, extending time frame in the ultimate breakout. So like step one, in the right direction here, speaking on the bull who wants to see this market break out. But I think it's important to maintain viability of the pattern. That's what happened at the closer.
Yeah. I mean, that was a big pop. Like within 5 minutes, I got 60 points on half my position and 100 points on the other half of my position within 5 minutes out of that key level in a bear market, bear day.
Yeah. I think that was the most aggressive imbalances we've seen this week.
It was real powerful. I should have done the SPX call. See, this is why I get so caught up in futures and I forget about it. I have a strong bias on that. That's why I was going counter trend on live.
I think you did just fine on the futures trade there, Becky. I don't think you need to talk about making $10 on a $5 option trade.
You can make a couple hundred, depends. But this was good. I feel really good about this.
I promise you made more total money on that futures trade than you did on that 0 DTE.
I did. Yep. This was a really good futures trade. Yeah, I feel good about that. That was a good pop, you guys. Thanks for hanging with us. That was fun. It's interesting too because
that was fun power hour.
Talk about the levels, what we're seeing, where we're aiming, how we're targeting, how we're scaling. Like these are all very important conversations to be a part of and to start to figure out. And yeah, thanks, Terminator. I was hunting when I was going to move my last target and it took me out too fast in profit. I was going to move it to 220 based on this level here, these bottoms here, this like triple bottom or whatever. But I didn't get it moved in time. But I do think we're almost there now. I would still be in because this is where I would put my target if I didn't get, had I been more aggressive on moving it. I like this 218 because of this bottom of this consolidation here, but I'm already out. I'm very happy.
I'm going to be interested in the overnight session tonight.
I see bulls, to be honest, because of the location on that triangle and the squeeze that we've been in and the way we got this power move here at the end here.
Before the power move, I'd been like, nah.
Yeah.
But that kind of the bulls who had been slumbering all day long, just kind of like retreating and giving up, run away like a bunch of chickens chasing rabbits in Monty Python on the Holy Grail. That's what the bulls were today.
Yeah.
But at the end, King Arthur steps up and gets the job done. Who knew we were going to do a King Arthur Monty Python's analogy there? But I think it works out. So I'm going to step up and see what happens tonight.
I'm super.
By the way, I'm anchoring on GC at 39.90. That's where the resistance conversation starts for me tonight.
There's a target on NQ. Yeah, I think 240 looks good. And I think 256 would be my next highest up. That was initial balance low. So that's the low of the morning activity is at 250, 260-ish if you're still in this long balance for NQ. Gold is, gold had a nice reaction. Yeah.
It didn't get to bump the other one did, but it did get right back up inside that pattern. And the two levels that you can anchor on if we see a gold recovery here to maintain the daily pattern are the 990 level. You got a 10-point range up to 4K, and then above 4K, you work up to 4010, then you work up to 4020. Like literally, it's walking up the stairs on resistance right now on gold. It's 10 point, 10 point, 10 point, 10 point.
Beautiful. There you go, guys.
All right, Becky. Wonderful power hour. Well done, and well done. You got some final thoughts for the team here today?
Trust yourself.
This is our last power hour of the week.
Oh yeah. It's a weekend for Matt and I, or at least we do other work on Fridays. We don't take the weekend off. We do other work on Fridays. But yes, thank you guys. Thanks for not judging me too harsh for my counter trend play because I did have a plan. And thank you. Let's, lead into our strengths and believe in ourselves. That's my main mission there is just believe in yourself because, harder said than done, but I believe in all of us. So if you don't believe in yourself yet, I believe in you. Stick with us. We got this. We're going to be 7-figure traders and we just keep putting in the work and showing up. So cheers to a wonderful evening for everyone.
Team, have a wonderful, wonderful rest of your day. Thank you so much for being the best part of Blue Sky. And if you love BluSky TV, hit that subscribe. Make sure that you get notified when we go live. Mike and the boys will be hanging out in the morning sessions. Becky and I will be back next Monday. If you need anything, obviously hit us up in Discord or other places as well. But truly, thank you for hanging out with us in Power Hour and the Technical Lab. And we'll see you next session. Thanks, everybody. Have a great rest of your night.